All right, hey YouTube. Gonna talk about Trump taxes. Now, I don't know much about thing. If it was up to me, if I was in Congress, I'd say, hey, let's do a 12 to 14% flat rate for everybody. Let's, no corporate income tax, capital gains tax, just tons of taxes. I would say flat rate, boom, done. There you go. The more you make, good. The more you get to keep. Essentially, in a way. Well, it's the same percentage taken out, so it's fair. But I mean, the more you make, the more you're going to keep, which seems fair to me. The harder you work, you shouldn't make less than they shouldn't take more because you work harder. That's crazy. If you work harder, you deserve more. You don't get they don't. Well, you're working harder than this guy, so we're going to take more out of your paycheck. No, sorry. That's what they do though, but anyways, I got it pulled up here. I wish I could make it. I don't know how they do that, where they have the screen. I don't know. All right. So, married individuals filing joint, because I mean, everybody says that it's a tax cut for the rich. And even if it was, my argument is good. At least someone is keeping more of their money. I mean, why should they take more from them? I mean, it should be no income tax. The government should be cut down to what the Constitution says they should be allowed to do. Which everything that they're doing today is just crazy. We can't even fund what we're doing today. Like people are like, oh, they're cutting things, in the welfare programs and stuff, but they can afford to do this. And I mean, I'm like, no, we can't afford to do this. We can't afford to do that. Should we be cutting anything in the welfare right now? Probably now we should be cutting things that, we should be cutting the corporate welfare stuff first, if anything. But I mean, I would like to just, if I could, if I could check mark a box of everything to cut at once, I mean, that box would be huge. That list would be huge. But I'm not there yet. I plan to be, and I'll put a link in the description for a GoFundMe that I'm to fund my campaign in the future. I always say this, I don't expect you to believe that I will use it for that, but I will. I'm like an honest person. I would not do that. Even if there 200,000 in there, I'd probably run today then. If there was 200,000 in there today and I could run for some type of political office, I wouldn't use all of it. I'd try to use the bare minimum that I could to get noticed in a town and maybe become a board member of the school. Or I wouldn't want to do that though, because I would be like, let's get this public school ended. We don't want it. Like, I would want probably to be ahead of like the Kent City community council. It's something like that. I looked into it a while ago, but because I want to change is what we're doing. We are doing the wrong thing, and we're going deep. We're digging deeper and deeper, and then the deeper we dig, we look up and we say we're deep. How do we get out of here? Well, you keep digging. No, you need to start burying the hole. Start putting more dirt in the hole. Get back up to level ground. Don't keep digging yourself in a hole, which is what we're doing, because we think when the government does something and then it fails, the government is not going to say, yes, we failed. No, they're not. They're not going to do that. They're going to say, oh, this happened, or this is why it happened. And then the people take that as word and go, yeah, that's why, makes sense that's why. So let's do this and that and that. And it just makes the problem worse. It's kind of like I was saying in my last one, that the tax cut if this is a tax cut for the rich, which I'll get into, and this economy fails, because I mean, Trump's cut some regulations and he's cut taxes. And if the economy fails, the government, the Democrats are going to say, look, it's because we cut taxes and cut regulations. No, it's because the Federal Reserve is pumping all this money into the bond market. The bond market's getting propped up. Therefore, the stock market's getting propped up. it's all fake. The stock market's fake. You can go check out Greg Manarino. He talks about it every day. He'll tell you everything about what's going on. The dollar's down. Why is the dollar down? But the economy's so great. I don't know. But let's get into this. What this video is about, and that's these tax cuts. I have it pulled up. Government Track Us. It's govtrack.us. And I suggest everybody to go to it if you're watching this right now. Go to it, subscribe to it. They'll send you a daily email or even a weekly, whatever you want, about your representatives. If you type in your address, it'll pop your representative up. It'll pop your state senators up, and you click on it, and you'll say, I want to subscribe to this person, and you'll have and they'll send you an email about how that senator is voting, how your representative is voting, and what bills are coming up to be voted on. And they'll tell you everything that's going on. Get on that. If you want to know, if you're truly upset with the world today, if you're pissed off about what the government does on a daily basis, get on there and see what they're doing. And when they do something you don't like, call them. Tell them, hey, why did you do that? Set up a phone conversation. Talk to them. Who cares if you sound stupid because you don't know what you're talking about? Tell them that you don't like what they're doing. Just simply say that. I don't like what you're doing. Quit. Vote for the American people, or I'm going to vote for someone else next year, or whenever the next vote is. November of this year, there's a midterm vote. Get out there and vote. See who's running. See who you like. Watch them daily. See what's going on, because that's the only way you can. I hate when people say their vote doesn't count. It counts more than anything in the world. How does your vote not count? If you don't vote, yeah, your vote doesn't count. At least vote. And if the system's rigged, it's rigged, but at least you tried. If you just didn't try, then that's what's happening. We're not trying. How many people vote? Like, for the president, yeah, a lot of people get out and vote. But at my work, no one votes. I'll ask everybody, who'd you vote for? Well, I didn't vote. But they're going to complain about what's going on? No, shut up. Don't complain. By not voting, to me, that's saying, I'm okay with what's going on. You can't say that you're not okay if you're not voting for something different. Anyways, Michigan, get out and vote. I don't care who else you vote for. Vote out Debbie Stabenow. Get her out of there. She voted no to audit the Federal Reserve. I don't care how long ago it was. It was in 2012 that she voted no to audit the Federal Reserve. That's mind-boggling. What reason can you give to not audit the Federal Reserve? I guarantee they were getting money to vote no. Or maybe they just, whatever. That's so crazy. All right, tax code. All right. Married individuals filing joint returns and surviving spouses. So this is married individuals who are filing joint returns. Like I said, I'm not all up with the lingo. I suck with words. So I would think married individuals filing joint returns, which is joint, so they're together. They're filing together. If the taxable income is not over this is strictly from GovTrackUs. This is the bill. I'm reading the bill as it is, as it got enacted and signed by Trump. If taxable income is not over $19,000, so if you're not over $19,000, the tax for you would be 10% of taxable income. So you're going to be taxed 10% if you're below $19,000. Let me get my phone. Oh. Got it. All right. I'm just going to get the calculator out because to show you what it's going to be like now, pretty much. We're going to do exactly what it is, though. 19,050. Okay. 10% of that would be 1,905. And this is yearly, I'm guessing. Definitely yearly. So that's $1,905 every year. Okay. Which that means if you're making $793 a paycheck every 2 weeks, that would be I'm not going to do this every time. I'm just doing it right now just for a couple because I do got to leave in like 10 minutes or so, but quit. So you're getting taxed $79 a paycheck. because it's 19,000 a year, getting 10% of that yearly. So I had to do 19,000 divided by 12 divided by 2, which would be the 2-week paycheck. But then I had to go back and do the tax of 1,905 divided by 12 divided by 2 to get $79 a paycheck. So if you're making 1,000, no, that's tax. Okay, so 793. So you're keeping. So if you make $793 gross, you're gonna keep $714. So if you make $793 a paycheck, you'll be keeping 714 of that. I can tell you right now, I make about 1,400, but I got other things coming out of it too, but 1,400 about every paycheck, and comes out of that I keep about 900 something. So that's about $500 that I pay in taxes. Well, no, because I got that, blah blah blah. You got a bunch of health stuff. Anyways, that's pretty good. I would say 10% of that. That's a year. I mean, that's so $79. I mean, that's not bad at all. Over 19,000, but not over 77,000. So if you're between 19,000 and 77,000, you're gonna see this tax. I don't understand it either. But okay, it says, oh, that's funny. That's the same number. 1,905. So you get taxed $1,905 a year, plus the 12% of the excess over that 19,000. So because once you make 19,000, you get taxed your 10%. So it's basically 10% plus the 12% over the 19,000. Because it's such a big gap between 19,000 and 77,000. So if you're 19,000, you're going to get taxed. If you only made 19,050, you'd be taxed 10% plus the 12% of that $1. Okay. Anyways, now if you're over 77,000 but not over 165,000, that's going to be $8,900. So they're going to tax you $8,000, and then they're going to plus the 22% over the excess of the 77,000. So I mean that's pretty understandable. I'm not going to calculate all this. I don't have enough time. I would, but I'm giving you all the numbers exactly on here, so you could go if you wanted to figure it out. There you go. But this, I mean, I feel like this is proof that it's not really for the rich. I mean, so far even, because I mean, how is it for the rich? Everybody's getting a tax cut, you know. Maybe I'll make another video that compares this tax cut to the what they were paying before. But right here's my tax code. What mine's gonna be I'm over 19,000, but I'm not over 77,000. So I'll get taxed $1,905. So if I make around 30,000 a year, that means I'll be taxed 1,905 plus 12% over that. So I'd have to do 33,000 minus 19,050, because it's everything over that, not under it. So that's going to be 12%. That's another $1,746 totaled at be paying $3,651 a year. So I'll be paying $3,651 a year, about a year, in taxes. So if I make that and I pay that, I'll be keeping $30,000, and I make 33,600. That's not bad. That's pretty good. That's pretty good. I feel like that's me. I don't care how you feel about what you get, but I'm happy with that. And this is enacted, so this is what it is. So this has already been signed by President Trump in December 22nd. I'll keep going now, kind of like speed fast, but all right. Over 165,000, but not over 315,000 would be 28,000 plus 24% of the excess over 165,000. Over 315,000, but not over 400,000 would be 64,179 plus 32% of the excess over 315,000. Over 400,000, but not over 600,000. 91,379 plus 35% of the excess over 400. If you break that, hey, quit. All right, over 600,000. So it stops at 600,000, and this is it so far. If filing jointly, oh, this is filing jointly. So my math's all wrong for me. I'm sorry. I'm kind of mad. I look dumb. All right. Yeah, but who's gonna make 19,000 together? Damn. All right. Anyways, over 600,000. So so then I would be in the. I'd be in this. I would be in that bracket though, but I don't know how that would work. That was if I was married, but I am engaged. But all right, over 600,000 would be 161,379 plus 37% of the excess over 600,000. Okay, heads of household. The following table shall be applied in lieu of the table contained in subsection B. This section other than subsection shall be applied as provided. Okay. Okay. Head of household. Unmarried individuals other than surviving spouses and heads of households. Okay. See, like I said, I'm not a tax. I don't know these. I mean, this is all legalese almost, type of words, law words. So I would suppose I'm either going to be in one of these, which is going to be there's the following table should be applied, or this is heads of household, and the next one's going to be unmarried individuals other than surviving spouses and heads of household. But then this one's the heads of households. But I'll do both really fast. Taxable income is not over 13,000. It's 10%. Over 13,000, but not over 50,000. It's 1,360 plus 12% of the excess over 3,600. Over 51,800, but not over 82,500 is 5,944 plus the 22% over the excess over 51,000. Over 82,000, but not over 157,000 is 12,698 plus 32% of the excess over 157,000. Over 82,500. You can go to governmenttrack.com and you will see, and you just look up you look up in the tax section, you'll find it, and you can go through this whole thing that's about, I'm just scrolling. It's just arrow down. It's still just going long. Still going. It's still going. Oh my Lord. It's huge, It's just da 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 da. It just keeps going. New reloads page. It's probably like, I wonder if it gives me the pages. No, probably not. Okay, here's a little summary. Individuals. The final bill would keep the 7-tier tax bracket structure of current law, as opposed to the House proposed 4 tiers, but would lower the rate for the highest earned from 39% to 37% and raise the threshold significantly. The bill would also nearly double the standard deductions for individuals, but would repeal personal exemptions. I don't know. I can't understand it. I don't know if you guys will. You can go on there and check it out and then comment back to me on this video what you think. But that's about it. I would say, I mean, it's a tax code. It's long. I wouldn't, if I was in Congress, I would have probably voted yes on it, but I would have proposed my own. I don't know how it works. Okay. But if I could propose a bill, like if I could just say, here, Mr. Trump, this is what I suggest, 14% flat tax. Just do it. Bam. That's what I would want. 14% across the board. That's fair. That way, if you're working harder, you're making more, you know? Gonna end this video then. I hope you liked it. If you did, like, hit subscribe, and check out in the description a GoFundMe to fund my campaign that I will do in the future, whether it's 2022, 2024, 2026. I don't know, but yep, go hit like, subscribe, and watch the next video. Thank you.